So I had a request to talk about the different loan programs and what scenarios you would apply each program to. And this is a really great request because there are a lot of loan programs. What I'm going to talk about are the main four programs. That's going to be conventional, FHA, VA, and USDA. These are the most popular loan programs. So a conventional loan is going to be best suited for an applicant that has what we would call a very clean file. So what does that mean to you? A clean file is going to be a file where that applicant has a really solid credit score and their credit report is very clean, no negative events, anything like that. Also, they probably have a really good savings built up where they have their down payment, they have their closing costs, and even maybe some reserves in there. So it's a really strong case for that conventional loan. With conventional loans, you hear about these a lot for first-time homebuyers. A lot of the first-time homebuyer programs that you hear about are included kind of under that conventional umbrella. You may also hear a lot about, when you reach a certain amount of equity or you have 20% down, the mortgage insurance will drop off, and that also applies to a conventional loan. So if you are a realtor per se, and you're looking for the best loan for a client, and that client is just very solid, lots of money in the reserves, really clean credit, a conventional loan might be the best option for them. Then comes an FHA loan. Now, an FHA loan tends to be a little bit more favorable in terms of things like interest rate. With FHA loans, these are going to be great for people who maybe they are first-time home buyers, but maybe their credit isn't perfect, and that's okay. They maybe have some old events on there that just haven't come off of the credit yet. Again, perfectly fine. Their credit score may just be a little bit lower because of that history, but they've since, really been working hard to clean things up. Maybe even they don't have as much of a savings. They have a little bit, but not a lot. So they're going to need things more like concessions, possibly down payment assistance, things like that. FHA loans are designed to help these people who aren't perfect, right? Because nobody's perfect, but these loans are there for the rest of the population who just want to get into a home, have done all the work that they need to do. They just need a little extra help. So FHA loans are great for that. They're typically 3.5% down, and a lot of the down payment assistance programs do fall under the FHA. Not all of them, but a lot of them do. And then would come a VA loan. I feel like a lot of that is very self-explanatory. VA is a loan for veterans, right? But there's a lot of benefits to a VA loan. You're going to have 0% down being one of them. In some cases, if they're retired, like 100% disabled veteran, they get a lot of advantages in terms of like funding fee exempt and property tax exempt. So there are a lot of benefits to using the VA loan, and there are a lot of veterans out there who aren't using their VA loan, and they don't necessarily understand all of the benefits that they get with them. So educating them is very important. And then for the USDA loan, the USDA loan is designed for people who are looking to live in a rural area, so kind of outside of the city. Maybe they're looking to start a homestead or something like that. There are income limits also for USDA. So you're only going to be able to get into a USDA loan if you fall within that income bracket. And the amount of income is based on members in the household, so it's on a scale. But it is a really great option for people who are looking for 0% down and looking to live a little more outside the city and live that country life. Now, I do want to touch on one other kind of loan, umbrella, if you will, and that's non-conventional or non-QM loans. Non-QM loans are great for the scenario where you have buyers who maybe don't make money traditionally, like a W-2. Maybe they're self-employed, maybe they're foreign nationals, or something along those lines, and their income is a little different, or their overall living situation is a little different. These are great loans for those people. So if they don't fall under kind of those four main loan umbrellas, then you can look at non-QM options as well. So in this day and age, there's just about a loan option for anybody in any situation. If you have any other questions about loan programs and scenarios, who qualifies for what, let me know. I'd be happy to